Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. In studio with me, I'm joined by Peter Armitage and Hechter from Anchor Capital. Now today we're talking FirstRand. Listed on the JSE and the Namibian Stock Exchange, FirstRand Limited is one of the largest financial institutions in South Africa and provides banking, insurance and investment products and services to retail, commercial, corporate and public sector customers. Gentlemen, good to have you with us this evening. Liam, let's start off with you. Your thoughts on FirstRand, and overall it's quite a large group with different subsidiaries, but overall managing to perform quite well, I understand.
Yes, and certainly in terms of global peers, FirstRand must be right up there with some of the best performing banks in the world. It is now globally a large cap bank, I would say, and in the context of EM it must be in sort of the top 10 banks by market cap in emerging markets. So FirstRand is definitely, it's a key player in emerging markets.
Even though that hasn't always been the case, but maybe let's break it down in the different segments which they represent. F&B probably the easiest to recognize for a lot of South African consumers. Pete, your thoughts on that bank? I think of late it's really come across as the innovative bank for everyone and suits everyone's needs, so to speak.
Yeah, if you go back sort of 10 years or so ago, it was a bit of a laggard. But I think management, led primarily starting probably 7-8 years ago, maybe even 10 years ago with Michael Jordan, came in and made a big impact. And I think the whole FirstRand group has been characterized by innovation, commitment to getting things right, getting margins right. They run the business extremely well. And that's reflected in a lot of what we'll talk about today is the return on equity, where it's a bank that's achieving some of the best ratios amongst its peers, exactly. Which is a reflection both of business mix. They've got some businesses which are high return on equity if they get them right, but also a management team that's allocated capital well. And I think it's one of those, I mean, what's quite unique in the banking space, both here and globally, is FirstRand has still got that kind of owner culture. You know, it was started off by a few individuals, probably, I'd guess, 25, 30 years ago now. I can't recall exactly when. But, you know, they've certainly held the reins and certainly still have a lot of influence in terms of the culture of the business, the way it's run, the commitment to getting things right. Whereas the other banks are really managed by professionals who've been brought in to run an operation. And I think that has manifested itself in both earnings growth, returns, etc., etc.
On the other divisions, we've got Westbank there and RMB. Ashburton also plays a role there, but like you mentioned, slightly insignificant when it comes to the bigger scheme of things.
For now it is. It's not separately disclosed. I think in the results that came out yesterday, you started seeing them disclosing a little bit more information about Ashburton and the growth prospects there. And just to put it into context, Ashburton is an asset management business that operates in the alternative and the traditional asset management spaces. And I think over time you'll see, because of the capital light nature, which is very accretive to ROE, management will put a lot of energy into growing that business.
But coming back to those results that you mentioned, another message that came through quite strongly was trying to ensure that their customers almost interact with every level of subsidiary that FirstRand has when it comes to insurance, asset management. Is that a particular theme that might aid the growth story of FirstRand? Definitely.
I think cross-selling within FNB has been remarkable. I mean, I think that the ability to gain customers, especially under the leadership we mentioned earlier of Michael Jordan, and I definitely echo Pete's sentiments there. I think he was a very inspiring leader, and I think what they did well over that time, probably 4 or 5 years ago, I think most people remember the Steve adverts on the radio, and I think, you know, because we still remember them, they definitely rung in the ears of South Africans, and a lot of people switched over to FNB, and what they've done very well is gotten those customers to now be integrated more within the banking products on offer within FirstRand.
Coming back to the valuation, though, of the company and the creation of the return on equity, which Pete alluded to, how was that compared so far in recent years?
The return on equity is in the sort of mid-20s, which for a bank, especially in South Africa, is high. You know, South African banks generally, around, if you compare them to global banks worldwide, our ROEs tend to be quite high because we have quite a high net interest margin, that sort of the difference between the cost of funding and the money that they're generating from customers. And FirstRand has definitely managed to leverage that. So if you look at the ROE profile of FirstRand, what they've done well is to grow the ROE via the return on assets and not by an increase in the gearing in the bank. So I think that if you sort of look at our normalized earnings levels, we see that possibly the ROA, which is the return on assets, might normalize in future periods, but the management do have the ability to re-gear the balance sheet, and I think that will provide the bank with the opportunity to defend its current rating that it attracts in the sector.
How sustainable is that, though, going forward in the future, given the fact that it's becoming quite competitive in the local banking landscape?
Yeah, I think it's pretty structural. There's 4 big banks in South Africa. Capitec is now emerging as a powerful 5th competitor. But I think the whole return on equity of the whole South African banking sector has stayed within a certain band. And I think they haven't competed with each other to the extent that there's any kind of, there'll be a 5 or 10 year structural decline in margins and returns. I think the banks, there's 4 kind of quite big responsible players. They've tended to act quite responsibly, and I think South African banks are just giant compounding machines. Growth rates will probably be a little slower over the next 5 years than the last 5 years because the economy is pretty slow, and they have done quite well. There isn't too much more to squeeze out of the lemon. But ultimately, you're still going to get kind of 10, sometimes 15% earnings growth. You're going to get a 3 to 5% dividend yield, depending on where the price is. So it's some of the most reliable shares you can buy just to deliver you a compounding return. Probably not that exciting from a short-term share price point of view, but a really steady, low-risk investment to put in a South African share portfolio.
Let's touch on that valuation further, looking at the graph on screen, the trailing PE versus the average that we've seen. Does this mean that despite the recent rally we've seen in the share price, it's still maybe a good one to pick up?
Yes, so if you look at recently, the market's gone through very volatile time. I mean, we probably close to 10% of highs for the South African, for the JSE, and FirstRand being quite a big portion of that index has actually gone through a bit of a derating. And we think that possibly that could provide us an entry point that's a lot more attractive than, say, 2-3 months ago.
What about RMB, though, and Westbank, the 2 other divisions? Pete, to your view on RMB, is it managing to gain scale when it comes to the asset management business?
So RMB is, its primary activities are not really the asset management side. That's more in the Ashburton. But RMB is very much intellectual capital business. A lot of smart guys doing a lot of good deals and employing capital in different ways and getting quite nice returns. But I think their earnings base at the moment is fairly high. Westbank has done an incredible job of dominating the installment sales business in South Africa, and they've gone and entrenched themselves with many corporates, done joint ventures, so they become like permanent partners of these businesses, and have achieved great margins there. But again, that business might be a little bit toppish to the extent that vehicle sales are under pressure, and they have been getting quite good margins. Bad debts will probably pick up a little in that business. But again, it's been characterized right across the group. It's been a business that's been very well managed. And if you go from 10 years ago to today, they've snapped up a huge amount of market share in that space.
So if growth might not come from Westbank and maybe RMB, as you allude to, where are we looking for growth opportunities in the next 5 years from this particular organization?
I think specifically to FirstRand, I think that we're not going to see the same growth that we saw over the last 5 years. I think that's an important point to make from the outset. But I do think that FirstRand has the ability, because they've been very conservative with their provisioning of bad debts, that I think that they're going to have levers to pull to defend sort of probably double-digit, like you'll push out probably double-digit earnings growth. And I think that in the context of a low-growth South African environment, especially when you're looking at banks, which is largely a macroeconomic call, I think it's an attractive growth profile, relatively defensive at least.
It hasn't taken the lead on the continent, but also has operations in India. Are we optimistic about that exposure to that emerging market?
Yeah, some of the other guys have done the non-South African stuff a little bit better than FirstRand. I think FirstRand have been quite cautious in terms of employing capital elsewhere. But again, some of the other banks have really messed it up. Standard Bank have put money in places all over the world and come back with their tail between their legs and a little bit less than what they're left with. So I think FirstRand have been conservative. They've been more kind of suitcase bankers up into Africa, where they've gone and done selective deals in places at the right time. So they have done some nice deals and got some decent return. But I think what they have said in their last results is they have got some capital highlighted for African expansion. And ironically, Africa is now going through a tough time. So it might be a much cheaper time to get your base into Africa. You actually want to get into these things when they're at a low, not when they're at a high. The African story is a great story for the next 20 years. It might be a tough story for the next 2 or 3 years, but that's probably when you want to employ the capital and get your base into Africa.
Time now to get the view from our experts. Buy, hold or sell FirstRand. Liam, your view?
Right now, the metric that we generally look at with banks is a price to book ratio, what premium it's trading to its current NAV. And FirstRand, it is priced quite expensively in its sector in South Africa and if you compare it to global peers. So in the context of South Africa, and I think a large part of the investment case for banks in South Africa, if you're just talking to someone generally, they'll usually say, you know what, it's a 10 times earnings forward as a sector with a 3.5 dividend yield, 4% dividend yield. That's attractive in light of the South African market. But when you look at the bank on a price to book ratio, I think that right now it's probably, I don't think there's any catalyst to prompt a re-rating, i.e. for it to have a multiple expansion. I think right now this is, I'm reticent to say, but I'd say it's probably a hold.
Probably a hold. Pete?
I think it's an excellent pillar to have in a portfolio. Don't expect any, from a share price point of view, don't expect great things over the course of the next 6 months. I think the whole market's under pressure and it's not that cheap. But if you can get 10% earnings growth and a 4% dividend, it's one that's going to deliver that year in, year out. So we definitely have it in a high quality, longer term portfolio. Right now, we'd probably rather invest in an American bank where the valuations are good. They've gone through bad times. They're starting to recover. We always look at things from a global perspective. But in a South African portfolio, happy to hold it. But if you came to me and said, give me 5 racy shares for the next year, FirstRand wouldn't be on that list.
Exactly. So a very cautious view then we're taking on FirstRand. Leadership changes as well with Johan Burger, the incoming chief executive. I take it confidence in him too?
Well, he's been there forever and he's worked his way up, and I think it'll be pretty seamless, him moving into that hot seat.
Exactly. Well, we'll leave it there for tonight. Our closing summary from both Peter and Liam coming through from Anchor Capital, telling us about their very cautious view on FirstRand. That's where we leave it for this week. Join us again next time where we talk more stocks.
For the latest fundamental and technical analysis delivered right to your inbox, log on to talkingstocks.co.za and sign up for the Talking Stocks newsletter.